Next cycle, if we added a zero, fair value would go to $1 million. You're like, oh my God, Mark, that's so ridiculous. Like, well, okay, let's back in.
Helps crypto more than anybody.
Mark Yusko is the CEO and Chief Investment Officer at Morgan Creek Capital.
Click subscribe so you don't miss any latest update like this. Hit the like button and let's start. When this question was asked to them because of the dip, we're still dipping.
Well, we're still dipping. I just think what I mean uncertainty is we have a lot of people talking about, lots of different things. If you ask 10 people, you get 11 opinions. But I think what keeps happening is, you get a sharp drop and then you get some stabilization. People, oh, see, that's the bottom. And now we're going straight back up. Like, well, based on what? And then you get another sharp drop. And it's these, I'll just use Bitcoin as the reference, but you get a $5,000 move in Bitcoin in a few minutes. That's disconcerting because it raises questions like, where's all the liquidity? Why? But you flip over into the traditional markets, TradFi markets, you got stocks that gapped 10, 12, 15, 20% today, right? So there's definitely uncertainty, about valuations, about liquidity. And then the other thing that is related, but not exactly related, is what's happening in the metals markets, right? You had these.
So there's definitely uncertainty, about valuations, about liquidity. And then the other thing that is related, but not exactly related, is what's happened in the metals markets, right? You had these just parabolic moves up to end last year and the beginning of this year, and everybody's talking about different things, but then you had this massive correction starting last Friday, and people say, oh, they wiped out $9 trillion in 3 days.
Well, kinda, but that 9 trillion never existed, right? I mean, if you tried to sell all that gold and silver at those high prices, you never would have got it. And the minute someone tried to sell even a little bit, those prices collapsed.
And the minute someone tried to sell even a little bit, those prices collapsed. Some would argue they were manipulated down, whatever. But then they bounced back up yesterday. The chart that scares me the most. Austin is the picture of gold volatility right before the Weimar devaluation. So it's not the movement of the price per se, but it's the change in volatility from a regime of stable, still volatile, but stable to unstable. And that's when fear, panic happens, and things can turn ugly really quickly. So take crypto out of it in 2026. What do you see markets doing? Like, what sectors will do the best? What's in for the biggest volatility?
Which is kind of a great exercise for me. It's called the 10 surprises. And, I stole that idea, borrowed that idea from Byron Wien, famous strategist for Morgan Stanley and Blackstone. And you basically, people think it's Mark's opining on his view of the world. It's like, no, just the opposite. So what you do is I spend 3 weeks, 4 weeks gathering the consensus for every asset, from stocks to bonds, to real estate, to commodities, to digital assets, to China, to Europe, to, Middle East, whatever. And then once you have the consensus, that's what everybody thinks, and that's mostly in the price. So let's say everybody thinks stocks are going to go up 8%, which is the consensus every single year. I mean, it's like lockstep. Well, that's not going to happen. In fact, never, like the average return on equities is 10.5% compounded per year. We've never actually had 10.5%. Like in 140 years, it's never actually been that.
It's rarely spot on, but directionally it's right about half the time. So the idea of a surprise is, let's form the opposite of the consensus. If you get that right, you can probably do better than average. So I'll give you an example. Last year in 2025, back in January, I did my, and I always do 11. I do 10 plus, a bonus surprise. And the surprises went 6 and 5 for the year. 6 were quote unquote right. 5 were wrong, meaning the consensus was right. Now, what's interesting, if you just bought the market, last year was a really good year. Market went up 18%. The US markets, if you had bought an equal weighted portfolio of the 11 surprises, you went up 32%. Which is better. Now you're like, oh, well, how like you were wrong half the time? And the ones you were wrong, we were really wrong. Like, we thought markets would go down. We thought the, economy would recess. Bottom line is China is like, yeah, whatever, knock yourself out. We're just going to keep shipping you less. And we're going to ship more to Africa, Europe, Southeast Asia, and we're going to become the dominant player. And oh, by the way, we're not going to convert to dollars anymore. We're going to have them pay us in local currency or renmin. Hey, so just got reported this morning, U.S. trade as a percentage, EU.S. exports from China to the U.S. as a percentage are down to 10%. Now, if you think about it, 30 years ago, it was all about made in China, right? We outsourced our pollution, our factory jobs, all the stuff nobody wanted to do. We sent it to China so we could buy cheap stuff. And literally, my friend's, daughter 20 years ago said, "Daddy, I thought you said Santa Claus brings the presents." It's like, honey, he does. Why? Why do they all say made in China, right? And that was the thing. Well, now it's not about that. Now it's about made for China. The key to the next 30 years is taking advantage of the largest consumer class in the history of mankind, which is the Chinese middle class, right? 750 million people. That's the size of the US plus Europe together. That consumer class, out of abject poverty in the middle class, even into upper middle class, they are going to consume more than everybody else. So that's why things like, BYD automobiles and all kinds of amazing stuff is happening in China. Well, what does that all mean? Well, that means that Chinese equities are probably going to be a pretty good place. So that's another thing we're pretty bullish on. It means people that support China, right? People have good relationships with China, like African nations or Southeast Asian nations, Indonesia, Malaysia, probably going to be pretty interesting places. In fact, for the last 20 years, it was all about the US dominance over everybody else. So US versus emerging markets was a one-way trip last year. For the first time in 20 years, emerging markets outperformed the US. I think that'll probably continue. Maybe it won't be 20 years this time, but I think that'll be a pretty good bet. Places like Brazil are interesting. Place like India, interesting now with the new trade deal. India had a big move last night.
We already juiced the economic growth, right? The real economic growth is sub 2% because economic growth is a combination of working age population growth, which is sub 1%, and productivity growth, which is sub 1%. So real economic growth is about 2%, sub 2%. But, oh no, Mark, it's going to be 4% last year. Yeah, because we built a lot of buildings and we let people depreciate.
When asking about the Tom Lee and Raoul Pal are wrong, analysts like Real Vision and, Tom Lee's people, they're all about the business cycle, liquidity picking up this year, and Besant in the White House going to juice the economy for the midterms. Do you put any weight into that?
To me, there's two ways I approach it. So one is Bitcoin gold equivalence, right? Which is, I do believe someday the monetary value of gold, which is about half of the total value, because the other half is jewelry and chalices and art and stuff. But the monetary value, the bricks that are in central banks, et cetera, is about half of the value of gold. So, way back when we were 20 trillion of gold, I said 10 trillion of Bitcoin value. So, that was where I got the directionality for the 100,000 to, 120, 140. The other piece of it is every halving, we add a zero. So we increase the total market cap 10x. Now, does that mean it has to happen every time? No, but it has, from 10 to 100, from 100 to 1,000, from 1,000 to 10,000, 10,000 to 100,000. But that's the fair value. But inevitably, we go above fair value. So when it was at 10,000, we got to 20, and at 100,000, we got, I thought, we'd get not all the way to 200, but 150 maybe. I think that was the number in my presentation last January. And we got to 126. Okay, so call me a liar. Now, at least I wasn't the guy calling for 2 million. There are plenty of those, but that's a long-winded way of saying
Bitcoin price prediction by peak of next cycle. I think you were pretty darn accurate calling this last cycle when I asked you years ago. I think you said either 120, 140 max. I mean, we pretty much got there.
Of of juicing. And look, Powell is doing the logical thing as Fed chair, saying, never before in history have we cut interest rates and increased liquidity if GDP is over 4%. You just don't do that, despite what the president may want. So, what do you do? Well, you're going to change out the Fed chair. Now, Warsh is an interesting pick because I don't think he's like super dovey. On the other hand, he is politically, I don't know, in the party, so to speak. So even though they're independent, right? So maybe he'll do the bidding. But even if they cut short-term rates, the Fed doesn't control the real indicator of growth, which is longer-term rates and mortgages. And, I don't know about you, but anyone who's trying to borrow money in borrowing the Fed funds, right? Prime rate's still high, mortgage rates are still high, credit.
He say Venice or Argentina, same thing. When you're devaluing your currency, the price of the store value goes up. So money supply is growing 4.2, 4.3%. Okay, that's not that exciting. Maybe we get that juiced back to the long-term rate of 8%. Okay, but part of the challenge is Bitcoin as a store of value has to reflect the long-term history, right? Which is in 2020. If we say that it was fairly valued around 10,000, not including that drop to 5,000 for a couple days, but around 10,000, 10,000, 12,000. If we use that as a starting point, well, it's 70,000. It's pretty high relative to the increase in currency because the number that gets thrown away, and I was even Guifio for a while, it says that, 80% of all the dollars ever created, happened since 2020. It's a little bit misnomer. That's M1. So it's true in M1's case, but not M2, which is the broader money supply. Money supply is actually up more like 60%. So, a doubling of price or even maybe a tripling of price, So that's more like a 40,000 if it was just pure store value. But I'm not saying that 10,000 number was exactly right either, because you got to go back even further. So I still look at Metaf's law. I still think 80,000 is the fair value of Bitcoin, and that's going to increase, pick a number 5 to 6% a year forever. And so that's the compounding rate we should be looking at.